On Tuesday, I had my monthly strategy gathering for May, and it became very clear in that conversation that there was one specific thing that seemed to be happening across all these different kind of subsectors of this major asset class. And it was that one specific theme that kept rolling throughout the conversation that I wanted to share with you. Hey, everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend is commodities are bottoming. Or I could have said, are commodities bottoming? But let's just say commodities are bottoming. And I think they are bottoming, and I want to talk about that. I want to look at some price charts and also talk about what is the ramifications, the impact of what this means for everyone. So the most traded commodity in the world, way above everything else, is oil. Now, this is a price chart of West Texas Intermediate crude. That is basically a domestic oil for the United States. The international oil is Brent crude, but hey, it's close enough. Oil fell from about 110, a high of about 110, down to about $43. Pretty significant fall, right around 55%. And it finished falling at the beginning of this year in February and then did a test of that low in March, as you can see on the chart. But it broke down and then moved up, and now it's right around the $60 mark. So most likely oil is done falling. Now that doesn't mean it can't fall back to $55 or $50, but the likelihood of it going to $30 or $40 is pretty low. So most likely oil has put in its bottom. So there's one. Now as oil rises, that means the price of oil rises. I know, duh. But that means price goes up. That is inflationary. People are having to pay more for oil over time. That's inflationary. The second price chart I want to show you is another very heavily traded commodity in the world. I believe it's actually the second most traded commodity in the world, and it's coffee. And if you look at price chart, and if you look at a price chart, which we are right now, of coffee going back the last year, you can see that it has actually fallen pretty hard. And it has bottomed. It bottomed in March again, and then May. So it actually has a triple bottom right now, which is much stronger than a double bottom, much stronger than a V-shaped bottom. So coffee right now has a triple bottom in, and it's still within the trading range. But here is another majorly traded commodity on the planet that looks like it's bottoming. The other commodity I want to show you is sugar. Not as widely traded, but still sugar's in, especially in the United States, is in everything. And you have sugar here falling pretty hard, about 40%, 45%, depending on where you start at the beginning to the end, but about 40% fall. This bottom is not as powerful or a strong bottoming pattern as I would like to see, but it is still putting in higher lows as it moves off from the end of March. And there's definitely a bottoming going in, and sugar's been falling for some time. So yet there's another commodity bottoming. I then want to show you kind of all soft commodities, coffee, sugar, cocoa, soybeans, all the soft commodities in one price chart. And I can actually show you that with the ticker symbol DBA. That's a ticker symbol that shows the soft commodities. And you can see very clearly from this chart, actually the most clearly in any chart I've shown you, that over the last year, soft commodities have really been hit hard. And in fact, the last 3.5 years, commodities, especially soft commodities and precious metal commodities, have fallen. And if you look at the lower right corner of this price chart, I see a bottoming formation getting put in. It's still in that channel, but bottoming nonetheless. And then, so actually, let me take a step back here. So we've looked at energy commodities, we've looked at soft commodities, and then I just want to look at precious metal commodities. There is also copper. I did not include that, but copper has bottomed also. I bring copper in because it's in many things, and people say copper has a PhD in economics, and if copper is rising, that means the economy is doing well. The last price chart I want to show you is gold and silver. Now, this is an actual price chart of CEF, which is a closed-end fund with about half gold and half silver held in it. And not the best looking bottom. I've shown gold separately and silver separately where I said, hey, it could be bottoming. It's not the strongest looking bottom. There's some fragility to it, but right now it is bottoming, and right now gold and silver right now is bottoming. Has it bottomed? I don't know. Nobody knows. But what we have here is precious metals, base metals, soft commodities, and energy all bottoming near the same time. And again, overall, soft commodities have fallen pretty hard over the last 3.5 years. The question is, what is the takeaway? What does rising commodities mean for you and me and the everyday person? And to me, what it means is it means rising prices, right? Sugar goes up, coffee goes up, soft commodities goes up, wheat goes up, corn goes up, oil goes up, whether it's West Texas or Brent. Base metals go up like copper. Precious metals go up, silver and gold, palladium, platinum. It means people will be paying more and more for kind of what we use in everyday life. And if that's true, that's going to increase the price of things, which means most likely there'll be price inflation. Now, this will be price inflation that happens outside of the Fed doing anything, outside of them raising their federal funds rate. Right? The Fed has no control or direct control. I mean, they could probably influence over short periods, but they have no control over inflation if it's based from prices rising, right? Commodities increasing in price, they have less control over that. So it's very likely that we are seeing right now a bottoming in prices for commodities. What that means is the countries that produce the commodities will do better. Brazil is also bottoming right now. Australia has been hurt badly over the last few years, the Australian stock market. So that could put some kind of lift under that. And we will possibly see, and we don't know yet, inflation start to actually happen outside of the Fed doing anything, meaning outside of them raising rates. It will just happen on its own because commodities are rising. If that's true, and this will be the last takeaway, you want to look at investments that do well when prices rise. And that means looking at the countries and looking at the sectors where if there's rising interest rates, it will do well. Banks, regional banks specifically, will do well. Brokerage companies will do well. Insurance companies will do well. Thanks so much, guys, for being here, guys and gals. I appreciate it. This is just another step in helping you secure your future and your portfolio. Until next time, this is RC Peck.